Today we're gonna talk about 10 best companies to invest in 2022. Stocks can be a valuable part of your investment portfolio. Owning stocks in different companies can help you build your savings, protect your money from inflation and taxes, and maximize income from your investments. It's best important to know that there are risks when investing in the stock market. Here are top 10 companies we're gonna talk about. Number 1 company on our list is Tesla. Tesla has contributed to outperform expectation for years now, following up its extraordinary 700% gain in 2022 with a 31% YTD gain in 2021. As of June 20, 2022, the stocks has gone down 26% compared to last year. However, the company has transformed itself into a profit engine and Tesla plans to open 2 new gigafactories before the end of the year, which should increase its production greatly. With a market cap of $673.70, Tesla is on seemingly unstoppable roll. Second company on our list is Atlassian. Atlassian is an Australian-based software company behind products such as Jira, Confluence, Bitbuckets, Trello, and Oopsgenie. The company's software is primarily for software-based developers and IT departments, but it also helps in smart business collaborate and become more effective. Atlassian's growth boomed during the height of coronavirus pandemic, but it's likely to remain in favor as even more companies are now familiar with the how productive Atlassian softwares can make corporate teams. While they are remote or return to the office, Consuence Analytics estimate are a buy with a 12-month medium price a target of $338 or about 83% above from current levels as of June 20. Number 3. Disney. Disney is a long time Wall Street darling that has been nothing but disappointment to the investors thus far in 2021. As of June 20, Disney stock is down about 40% YTD, while the broader markets are up about the same amount. This wider gulf is underperformance is a characteristic of Disney, which has only provided solid and unreliable long-term returns. After rally sharpening of March 2022, market sell of Disney has been dropped precisely from its all-time high of $203 set in March 2021. However, sign of life abandon of 2022 bounced back as the company's main business line, field entertainment, cruise ship and theme parks are all reopened and generating revenue again. Disney vast treasure love of content also been sure to fuel the company's growth in its streaming service Disney Plus. Number 4. Norwegian Cuisine Line. If you are a bit of gambler, Norwegian Cuisine Line might grab your interest for a 2022 investment. The cruise stocks got hammered in 2022. It seemingly they will go up out of business during the height of the pandemic, and there are still some pundits who thought that there will be same even if they survive. However, before the pandemic, cuisine business were booming, and after the world returned to the normalcy, pent-up travelers flooded back onto the ships as soon as the pandemic in the rear view mirror. While the pandemic greatly affected the cruise ship stocks, the stocks on the rise again, and cruise line are rebounding on the back of the firming price and high customer demand. As of now, Norwegian Cuisine Line trade are whooping at 48% below its market value this time last year in the 2021, but higher than the 70% dip the stock stood in 2022. Number 5 on the list is PayPal. PayPal almost single-handedly changed the payment processing world, but it had been an absolutely dismal for 2022. As of June 20, the stock down about 63% YTD, while PayPal's growth has slowed a bit. It's still generating significant profit and posted 25.4 billion of revenue in 2021, which was about 18% from the last year before. As PayPal continue to grow and reach some users, more financial transactions are likely to increase, thereby benefiting PayPal going forward. Number 6. Docusign. Docusign rose to a strategic level in the early days of the pandemic as it seemed as if all the business would be down remotely. It's perceptibly as the world began opening up and business began turning to the same sense of normality, faith in the company began to wane. After the company announced better than expected earnings and revenue in its third quarter, earnings reported in December 3, the stock got hammered based on the fourth quarter projection below analytics exceptions. This while decreasing growth absolutely hammered the stocks, knocking it down about 40% in a single day. Although the stock is down 61% YTD, the company is set to grow 33% at a compound annual growth rate by 2030, making it smarter business to invest in the years. Number 7 on our list is JP Morgan Chase. JP Morgan Chase may be favorably positioned for 2022. Banks traditionally perform better when long-term rates rise and they are able to lend money at higher rates while still paying low-term taxes on deposit accounts. JP Morgan Chase remains open on a relate basis about 10% X earning and it pays at least 3.54% dividend as of June 20. Most of the stocks as 30% YTD decline came in January, and then stocks has become less flaunted over the increase again may before decline again. Despite a current decline, JP Morgan is a reliable dividend stock with a 25% dividend payout. Number 8. Ford Motors. Ford Motors has had a dismal run for the past 2 decades, with the stock trading about where it was in 2001 with a 48% YTD decline in 2022 as of June 20, but the company has new life based on its shift towards self-driving electric vehicles. The company's now F-150 Lightning was recognized as a new Ford with a nearly 2 lakhs reservation and a production schedule of only 15,000, 55,000 and 80,000 trucks in 2022, 2023 and 2024 respectively. The company pays healthy dividend of 3.56 and still trade 4.8% below its all-time high of $42.45 dollars set way back in 1999. Number 9 on our list is Adobe. Adobe Incorporation is another high flyer that has been severely declined and stand at 36% YTD. Some investors took that in negative outlook from Docusign to mean that pandemic boom was nearing and Adobe would also suffer financially. But Adobe has been consistently firing on all cylinders for the year and all these trends on the back of the company's cloud and subscription business seems like to continue despite some setback in the year. Adobe has gone up 148% over the past 5 years and remain a valuable stocks to invest in 2022. Number 10 on our list is Pfizer. Pfizer has always been defensive stocks in the time of overvalued market. So if you are of the belief that there are bubbling forming, Pfizer might be a good option for you. But Pfizer is much more than a safe haven stock. Pfizer COVID-19 vaccine has been major value increase due to the pandemic, and its revenue could reach 109 billion by the end of 2022. Beyond its vaccine production, Pfizer still has a healthy drug pipeline, sizable free cash flow, and a 3.44% dividend yield of June 20. These are our picks for the top 10 companies to invest in 2022. Don't forget to subscribe the channel, like the video and share the video, and leave a comment for next videos.